Starting the process of home buying can feel overwhelming, especially if you're a first-time home buyer. It probably feels like there's a lot of stuff and a lot of new terms just getting thrown your way. The good news is if you clicked on this video, you're already on the right track, because this is the first stage of getting ready to purchase a home, is the pre-approval process. My name's Netta. I'm a licensed mortgage broker here in Calgary, and today I'm going to go over everything that you need to do before getting your pre-approval so that it can, number one, go really smooth, and then number two, so that you can get the highest amount possible if that's a goal of yours. So without further ado, here are my top 5 things to do before going and getting your mortgage pre-approval. Now, the first thing you're going to want to do is try to have as little debt as possible. And from the mortgage side, there is a little bit of debt that actually makes sense to have, and I'm going to explain that later. But what we do is we take a look at your income relative to the property expenses, relative to other debts that you also have. We use 2 ratios to determine what you can afford up to. The first one is your gross debt service ratio, which we're allowed to go up to 39% for. And the second one is your total debt service ratio, which we're allowed to go up to 44% for. The difference between these 2 ratios is that the TDS includes other monthly debt obligations, whereas the GDS does not. So when we compare these 2 ratios and we subtract it, you can see that there's a 5% spread between the two. So technically, this means that you're allowed to have 5% in debt relative to your income and other property expenses without it actually weighing down your pre-approval and the amount you get pre-approved for. A lot of people think that you need to pay out all of your debts before going and trying to get a mortgage, but that's actually not the case, right? If you have your debts within a reasonable amount, then it won't affect your qualifying. So you just want to be really careful and play around with those numbers and see what makes sense. If you have any questions or you don't understand this, or you kind of want to see what your numbers play out, just talk to a mortgage broker. You can give them your monthly debts, your income, and they can kind of play around with these numbers for you and show you what it would look like. One thing that I see really sink people in the debt category is car loans. Right? So car loans, they're usually really high monthly debt obligations. You can't finance them for that long, so your payments are pretty high. Even though you might not feel financially stressed from the car loan, we're looking at the future stress that you're going to be put under, right? So once you have the mortgage, the other property expenses, and plus the car loan, that's really what's going to bring you down. So it's really important to pay really close attention to that, because it's really sad when I'm dealing with an individual or a couple and I look, their income looks really good, but then they have this really high monthly debt obligation because of the car loan, and that's the reason that they can't qualify. So the second step is going to be to have your down payment and closing costs ready. When you go in, you're actually getting the approval. Once you find a property and you're conditional on it, then the lender's going to ask us for 90 days of bank statements. And they do this for a number of reasons. They just want to make sure there's no money laundering going on, no fraud going on, and they also want to make sure that you're not borrowing money for a down payment. Because if you are borrowing money for a down payment and you have to give that amount back, then that technically counts as a monthly debt obligation and should be included. The way this works is we're basically going to comb through every single transaction, and then if we see any large deposits, we're going to have an explanation provided to the lender, and we're either going to need proof or a really good explanation, right? So proof usually means a paper trail. If you think about it, if you're someone who's sending large e-transfers to a bunch of different bank accounts that you have, that's going to be a lot of paperwork that we have to go through. That's going to be a lot of statements that you have to give to us, and it's just going to be really paper heavy. So you kind of want to simplify it as much as you can. The best thing to do in this scenario is to open a new bank account, take your entire down payment, closing costs, put it into that bank account, and then leave it for 90 days. Now, this is going to help with a couple of things. The first one is that we're not going to be going through all of your transactions and seeing all of your personal transactions maybe, so it saves you a little bit of stress and worry there. And then the second one is we're not going to have anything to trace, because the money's then considered seasoned because it's been in there for over 90 days. So the lender believes it's your funds and everything's good there. Number 3 is going to be check your credit report. Now, the credit that we pull is going to be a little bit different than the consumer credit that you see, but especially if you're someone who's had credit concerns in the past, or maybe you don't even know what your score is at all, if you download an app like Credit Karma and just check your credit that way, it can be really simple, and it might be a little bit off, but it's at least going to provide you with just a sense of where you're at. Especially if you have something that you do need to work on in terms of your credit, you can see it easily, you can track it, and then you can know once you're at a certain score whether you should go in and actually get that firm pre-approval or not. So most lenders like to see around 680 as a credit score. So that's kind of a goal that you can reach for. Most on the A side will want that. The last thing you want to do is get all excited, get your documents ready, and then figure out your credit score is the thing that's holding you back. And sometimes, depending on where your credit's at, it can take a little bit of time to fix. So you want to get really ahead of that and make sure you know where you're at. Like I said, Credit Karma is a really good one because it updates regularly, it doesn't hurt your score to check, and it's really simple and user-friendly. Step number 4 is to start gathering your documents. Now, before you move on to this step, it's going to be really important that you talk to a mortgage broker, because depending on how you make your living, your income, how long you've been there, if you're incorporated, a sole proprietor, it's really going to make a difference in what type of documents we need. And you do want to get ahead of this, or at least have an idea of what you're going to need, because gathering your documents all at once, especially if you find the property you want, it can be really stressful, especially if you don't know where to look, you've never done something like this before. It can feel pretty overwhelming. This is going to come really into play as well when there's more than one person on the application, because now it's kind of a whole swarm of documents that we need. We need all these documents for person A, and then we need all these documents for person B, which if you work different jobs or you have a different structure, which in most scenarios people do, then we're going to need different documents for each. So it's really important to just understand where to find everything and get it, so that when the time comes, everything is accessible and really easy. There's certain documents that we need really recent versions of, so some might not be worth getting. For example, the letter of employment or the pay stub, we need those to be really recent, so it might not be worth getting that, but just knowing that you need that is a good step. I've seen it happen quite a few times where someone might not be able to log into their CRA, they forgot the password, maybe their accountant is MIA, so it's really important to just kind of get ahead of it and make sure that you're ready. Another thing to note here is that you're going to want your taxes filed and up to date, because that's really important to lenders to make sure you have no outstanding balance owing on your taxes. Step number 5, and I kind of touched on this a little bit throughout the video, is to talk to a mortgage broker, but more importantly, talk to one as early as possible. A lot of people make the mistake of waiting last minute, or even waiting until they have a live offer on a home to go talk to the mortgage broker. And what that does is it really just slows the entire process down, because once you're conditional, you only have a set period of time where we can go and get your financing approved. So it's going to be a really big headache, and it's going to be super stressful if you leave it till last minute, especially if you're someone who's in a tight financial situation, or maybe you had some credit concerns or some things in the past that you're unsure of, or maybe you know you're not in a position to buy and you're looking to be able to set yourself up. That's going to really help you get an idea as well of where you stand and what you can do to actually max out your pre-approval. There's a lot of times too where we need a certain length of history, usually 2 years, to count overtime, bonuses. Maybe you have a portion of your income that gets paid in commission, and we need that history for that. And if you're someone who might be really close to that history, or it might make more sense for qualifying purposes to just wait a little bit, a mortgage broker is going to help you figure all of that out too, so that you can really maximize what you can do with your pre-approval. Again, if you're a first-time home buyer, there's also going to be a lot of really little things that you might not understand, right? So like, how does interest actually work? What is the best mortgage term for you? Should you go fixed? Should you go variable? Mortgage portability, prepayment options, everything like that. We have the time then to sit down and go over it with you, so then we can also better match you to what product you need for your own mortgage. So sometimes we'll get people who will come in, they'll want this big brand new shiny home that's really expensive, really out of their price range, and then we unfortunately have to let them down. So it's going to help you come up with a plan and kind of guide you into the direction you want to be, and then we'll help get you set up so that you can get that property in the future. You have to remember that the lender is giving you usually hundreds of $1,000s in loan amount, so they're going to make sure that they cross their T's and dot their I's. That's the end of this video. Thank you so much for watching. If you want to get in contact, I will have all of my social media accounts linked down below. And if you enjoyed this sort of video, or you found this helpful, I would really appreciate it if you gave the video a like, commented, subscribed, and hit that bell icon so that you never miss another video.